Today, Cryptocurrency Academy will tell you the history of XRP through the one thing humans feel most clearly: the moments when price changes people's personality. Some coins rise on a story of fighting the system, but XRP took a different road. XRP rose on a promise to help the system move faster. But no matter which side you stand on, the market has only one way to teach its lessons. It makes you watch price move like a roller coaster. In this part, we will go from the time XRP was a name almost nobody mentioned, to the moment it became the center of one of the biggest frenzies the market had ever seen, pulling millions of people into a state of dreaming and panic at the same time. And because this is a story about rises and falls, we will anchor to specific dates and specific prices, so you can see exactly how human emotions get dragged around. Crypto Explained is not about slogans. It is about what price does to people. XRP was not born at a loud party. It was born in the workspace of people obsessed with speed and the cost of moving money. In 2012, the XRP Ledger began operating with a goal of fast transactions and low fees, aimed at cross-border payments. If Bitcoin is often told as a rebellion against banks, then XRP is often told as a tool that could help institutions move value more efficiently. That difference gave XRP a split reputation from the start. Fans called it practical technology, critics called it too close to the old system. But the market was small back then, and that debate lived inside a few narrow communities. For many years, XRP existed as a name not strong enough to pull in a crowd. And because of that, it quietly accumulated the most important thing of all: time. Crypto Explained starts here, because time is what turns a small idea into a massive storm. From 2013 to 2016, if you asked a normal person about XRP, they would stare at you. The crypto market was still thin. Most participants were tech-focused, and mainstream media did not truly care yet. Honestly, this is the era many people later look back on and blame themselves for. Why didn't I know earlier? But the truth is, knowing earlier is not the same as believing earlier. There was no giant wave yet, no quick, rich story to activate greed. When something has not created profit, it creates no temptation. No temptation means the crowd does not arrive. XR. In this period was like an empty road. Some people passed through, some people paused to look, but almost nobody imagined it would become a highway. And everything changed when the market entered the year everyone remembers, 2017. Crypto Explained is about that moment when silence begins to crack. At the start of 2017, XRP was still a coin many people viewed as small compared to the bigger names. On January 1st, 2017, XRP sat around $0.006368. That number looks like nothing, like you can throw in a few dollars and buy a huge pile. But prices that small create a very familiar psychological trap. People see it as cheap and assume it is easy to pump. Then, as the altcoin market started heating up, stories spread faster than reality. You began hearing lines like, "What if it hits $1? What if it hits $3? Even if you did not understand what XRP actually did, you still got pulled into the imagination game. The bigger the imagination, the easier it is to inflate greed. And once greed is inflated enough, the market shows you something strange. Something that looks cheap can rise in a way that makes people lose control. Crypto Explained keeps pointing to this trap because it is how crowds are born. In the first half of 2017, XRP started getting mentioned more, and the crowd started hunting for reasons to believe. The reasons sounded attractive: fast transfers, low costs, and the possibility of institutional attention. For newcomers, the story of real-world adoption often feels more trustworthy than the story of fighting the system. That is why XRP pulled in a specific type of buyer: people who wanted a coin that looked practical, looked useful, and looked like it had a door into traditional finance. By July 1st, 2017, XRP was around $0.2547, from 0.006368 to 0.2547 is not just a price increase. It is a psychological flip. At that point, people who used to laugh got quiet. People who used to ignore it started asking where to buy. And when normal people start asking where to buy, it usually means the market is entering the emotional zone. Crypto Explained is simply telling you the truth. The crowd arrives when the price already moved. Right at July 1st, 2017, our illustration story begins with a specific American character. Emily Carter lives in Texas, 29 years old, a project management employee, not a finance person. Emily heard about XRP from a coworker during lunch break. At first, she did not plan to buy, but then she looked at the chart and felt something that bothered her. She was missing what other people were making money on. Emily did not buy because she understood the tech. Emily bought because she was afraid of falling behind. On July 1st, 2017, Emily decided to buy 10,000 XRP at around $0.2547 per XRP. The total Emily put in was about $2,547. It was big enough to feel like a serious decision, but small enough that she could tell herself she would survive if she was wrong. That just risky enough amount is exactly what pulls so many people into the market right when it is about to go crazy. Crypto Explained is warning you here. Most people don't enter because they're ready. They enter because they're emotional. In the months that followed, as XRP rose, Emily started to feel right. Every time price ticked up, she felt more confident. She read more news, joined more groups, and the deeper she went, the more she got pulled into crowd language. People talked about the future like it was guaranteed. This is the most dangerous psychological phase. You stop evaluating risk, and you only see reward. Emily started thinking $2,547 could become $10,000, then $20,000. And when humans start counting future money as if it is already in their pocket, they automatically raise expectations and raise risk tolerance without realizing it. Emily began imagining she would pay down debt, upgrade her car, help her family. In her mind, XRP stopped being a coin and became a ticket. And when something becomes a ticket to a different life, people cling to it with emotion, not logic. Crypto Explained is not trying to scare you. It is trying to show you what the mind does when it tastes momentum. Late 2017 was the moment the crypto market in general, and XRP in particular, entered a near-fever state. People stopped debating whether it was good. They only debated how high it could go. This is how bubbles work. When price rises long enough, the market manufactures fake proof that it only goes up. And then one day, the frenzy hits a peak that later feels impossible to believe. On January 4th, 2018, XRP was around $3.1966. For Emily, it was a moment of happiness and danger at the same time. Because if she looked at her position then, 10,000 XRP times $3.1966 equals about $31,966. From $2,547 to nearly $32,000 is the kind of rise that makes you feel like you just beat life. But markets are brutal in one specific way. The moment you feel like you are winning the most, you are often most likely to make the worst mistake. Crypto Explained wants you to remember that peaks don't just break charts, they break judgment. At this point, Emily's story has two paths, and I will choose the most psychologically realistic one. She does not sell everything, because greed at that moment is hard to resist. But she also does not want to lose it all, because for the first time in her life, she is looking at money large enough to change her future. On January 4th, 2018, Emily decided to sell 6,000 XRP at around $3.1966. She received about $19,179.6. With those 6,000 XRP, she turned profit into real money. And that is an extremely difficult decision inside a frenzy. She kept 4,000 XRP because she still believed it could go higher. Emotionally, this is how many people begin to grow up. Not extreme, not all in, not fully running away. But even when a decision is reasonable, it does not protect you from what comes next. After a peak usually comes a dangerous zone where the market starts turning while the crowd still hasn't noticed. Crypto Explained is showing you that the hardest part is not buying. It is deciding when enough is enough. On that same date, January 4th, 2018, another character appears to show you the other side of the exact same moment. Brian Murphy lives in Arizona, 34 years old, a real estate broker. Brian does not care what XRP is. Brian sees only one thing: it went up too fast. And when people see something go up too fast, they usually split into two reactions. Cautious people stay away, and people afraid of missing out jump in. Brian jumps in. He reads articles saying XRP will keep rising, that this is only the beginning. Brian decides to buy 2,000 XRP on January 4th, 2018, at around $3.1966. Brian spends about $6,393.20. This is the kind of buy where you enter right when the spotlight is brightest. The feeling is intoxicating because you think you are joining a historic wave. But the market has a strange habit. It often uses that exact intoxicating feeling to pull you into the hardest timing of all. Crypto Explained is not laughing at Brian. Crypto Explained is showing you how normal people get captured. The point of this part is not to predict what happens next. The point is to understand the mechanism the market just activated. XRP went from fractions of a cent to over $3 in roughly a year, and that journey did more than create profit. It created the fake belief that anyone can win. Emily wins because she entered early and took some profit. Brian enters late because emotion pumped him full of certainty. Two people look at the same chart, but they are actually looking at two different worlds. For Emily, it becomes the story of, I was right. For Brian, it becomes the story of, I have to get in now. This is the key. The market rewards early entrants and punishes late entrants, but it does not announce that out loud. It simply makes late entrants believe they are still in time. And when too many people believe they are still in time, the bubble is usually already near its ending. Crypto Explained repeats this because it is the most common trap across every cycle. So what does this part conclude? XRP began as an idea focused on speed and practical value transfer, grew quietly for years, and then exploded when the market entered an altcoin frenzy. On January 1st, 2017, XRP was around $0.006368, and by July 1st, 2017, it rose to around $0.2547, enough to pull the crowd in. Then on January 4th, 2018, it hit around $3.1966, creating big win stories like Emily Carter in Texas, while also creating late entry decisions like Brian Murphy in Arizona. And the deepest lesson is this: the market does not only change price, it changes people. It makes early entrants believe they are brilliant, makes late entrants believe they are still in time, and both can get crushed if they forget that every bubble has an ending. If you think this story already feels intense, here is the truth. What happens after the peak is what keeps most people awake at night, because at that point, it is not only price anymore. It becomes about trust, exchanges, and legal pressure. That can flip the entire market overnight. Crypto Explained will continue because the next part is where the real pain and the real learning begins. Right after January 4th, 2018, the thing so many people did not want to hear began to happen. The market turned. When something rises too fast, it creates the feeling that rising is the normal state and falling is just a shakeout. But XRP and the whole market at that time were not shaking anymore. They started deflating. And what is frightening about deflation is that it does not always scream at you right away. It drags on. It makes people lie to themselves one small step at a time. People say a small drop is an opportunity, a bigger drop is an even bigger opportunity, and then one day they look up and realize they have been sitting in an elevator going down without knowing where the bottom is. In the weeks after the peak, XRP began slipping below levels people had sworn were impossible to break. Some days it dropped hard, some days it bounced, creating the illusion that hope was still alive. But those very bounces trapped people. They believed if they just held a little longer, it would return to the peak. If they just waited a little more, a miracle would show up. This is the phase where emotions completely switch roles. When price is rising, people fear missing out. When price is falling, people fear realizing a loss. And fearing realizing a loss means you do not want to turn pain into a fact, so you delay. The more you delay, the more you get stuck in a dangerous state. You are no longer making decisions based on strategy. You are making decisions to avoid the feeling of pain. CryptoExplained has to be blunt here, because this is where most long losses are born. The first illustration story in this period belongs to Michael Thompson in Florida. Michael is 31 years old, an IT technician, not a total beginner, but not a professional trader either. Michael saw the early 2018 frenzy and believed XRP would soon return to the $3 zone. On October 1st, 2018, when price had fallen far from the peak and the market felt gloomy, Michael thought he was buying cheap. He bought 12,000 XRP at about $0.55 per XRP for a total of about $6,600. Psychologically, this is a very common buy after a collapse. People do not buy because the market looks strong, they buy because it already dropped too much. CryptoExplained calls this the cheap trap because cheap is a feeling, not a signal. But what hurts people the most is not price dropping immediately after they buy. What hurts the most is price dropping slowly, dropping steadily, dropping in a way that exhausts you. XRP entered what many people called a winter, where every time the market tried to rise, it got pushed back down. By December 15, 2018, XRP at times reached around the $0.30 zone. Michael watched his position fall from about $6,600 down to around $3,600. He started asking himself, if I bought at 0.55 and now it is 0.30, am I completely wrong? But instead of accepting he might be wrong, Michael developed another reflex. He searched for reasons to stay, read more positive news, clung to the story that banks will use it, and told himself this was only a waiting phase. CryptoExplained emphasizes this because the market's favorite weapon is not a crash. It is fatigue. All of 2019 passed with a rhythm that destroyed patience. XRP had small upticks, then slid again. And that long drag created a different kind of loss, a mental loss. Many people did not blow up instantly, but they got worn down. Their focus got worn down. Their belief got worn down. And eventually, they left out of exhaustion. By December 20th, 2019, XRP was still only around the $0.20 area. For Michael, his 12,000 XRP were now worth only about $2,400. He did not go bankrupt, but he took a direct hit to his illusion. Buying cheap does not mean you bought right. Cheap is a feeling, right or wrong is about trend and time. CryptoExplained repeats this because it is one of the most expensive lessons in crypto. On the other side of the market, a different type of person appeared during this period. Someone patient and disciplined with price. Our second character is Sarah Nguyen in California. Sarah is 28 years old, a nurse, and she does not watch the market every day. Sarah has one simple rule. She watches only when the crowd is silent and everyone is tired. In early 2020, the market faced another huge shock. Global panic pushed crypto down hard. On March 13, 2020, XRP at times fell into the range around $0.11 to $0.14. Sarah did not know for sure it was the bottom, but she saw one thing clearly. Risk had been pushed extremely high, and price had fallen to levels many people once thought were impossible. CryptoExplained highlights this because the best entries are often not confident entries. They are controlled entries. On March 13, 2020, Sarah decided to buy 20,000 XRP at about $0.14 per XRP for a total of about $2,800. She chose an amount where, if she was wrong, she could still live normally. That is the difference with this type of person. They do not enter with the feeling that they must change their life overnight. They enter with the feeling that they can survive the worst case. And after buying, Sarah did not talk about XRP to anyone. She did not brag. She did not build a hype circle. She did what most people cannot do. She let time do the work instead of emotion. The market slowly recovered, and by November 24, 2020, XRP had returned to around the $0.60 zone, and at times even higher during the late-year surge. CryptoExplained wants you to notice the pattern: silence before, discipline during, and action when recovery appears. At this point, Sarah faced a psychological test similar to what Emily faced before, only the context was different. If Sarah sold on November 24, 2020, at about $0.60, her 20,000 XRP would become about $12,000. From $2,800 to $12,000 is a gain big enough to make many people lose control and start dreaming again. But Sarah did not want to turn a good decision into a greedy story. On November 24, 2020, she sold 12,000 XRP at about $0.60, receiving about $7,200. She kept 8,000 XRP because she wanted to let the rest run with the market. This approach does not guarantee you always win, but it helps you avoid letting one reversal erase everything you earned. CryptoExplained is saying this clearly: profit is not real until you make it real. And just when many people started believing XRP was coming back strongly, the market delivered another punch with no warning. Our third character is David Brooks in New York. David is 35 years old, works in sales, and he saw XRP rising fast in late 2020 and felt that familiar emotion again: I am about to miss it. On December 1st, 2020, David bought 10,000 XRP at about $0.65 per XRP for a total of about $6,500. He did not buy because he truly understood. He bought because he saw other people winning. This is a buy that looks a lot like Brian earlier. Buying under the spotlight, when the online story sounds certain, when everyone believes it is only one step away from $1. CryptoExplained warns you here because late buys rarely feel late in the moment. Then a little shock hit like a hammer. In late 2020, news of a U.S. regulator lawsuit against Ripple created a violent trust shock. No matter which side you stand on, the market reacts in one cold way: it sells. Fear spread because people started thinking beyond the chart. Exchanges might delist, liquidity might dry up, and sentiment might collapse overnight. By December 29, 2020, XRP at times fell into the range around $0.17 to $0.20. David watched his 10,000 XRP fall from about $6,500 down to around $1,700 to $2,000. And in a drop like this, the scariest part is not only losing money. The scariest part is uncertainty. CryptoExplained stresses this because uncertainty is what turns fear into panic. On December 29, 2020, David sold all 10,000 XRP at about $0.18, receiving about $1,800. He accepted losing most of the money to buy one feeling: closure. But that closure is often not freedom. It is a cut that stays. Because after you sell, you live with the question: what if it recovers later? What if I sold the bottom? And this is where the biggest lesson of 2018 to 2020 becomes clear. XRP does not only rise and fall with market cycles, it also gets pulled by human factors and legal factors. When a coin sits at the intersection of technology and financial institutions, at the intersection of market expectations and legal systems, you see volatility that is not just about up and down. It is about trust being tested again and again. CryptoExplained wants you to feel that difference because it changes how people survive. So when you close this period, you see three familiar types of outcomes. Michael in Florida bought cheap after the crash and got ground down over time. The longer he waited, the more tired he became. Sarah in California bought at peak fear and sold in parts during the recovery, turning gains into real money before the next storm. David in New York bought late while the story was hot and got hit by a legal shock that flipped the market in a short window. And if you look deeper, you will see the common point in all these stories is not whether XRP is good or bad. The common point is how humans react to price. When price rises, people believe they still have time. When price falls, people believe they only need to wait. And when a major shock appears, people realize the market can change direction faster than their emotions can adjust. From here, the XRP story enters its most intense phase, where it is no longer only a cycle of rising and falling, but a tug-of-war between community trust, exchange actions, and legal developments that can reshape the future of this coin. Crypto Explained will continue, because this is where the stakes get heavier. After the late 2020 drop, what remained in the market was not roaring confidence, but an atmosphere stretched tight like a wire. Many people were still holding XRP, but they stopped speaking loudly. Many people who already sold simply wanted to forget. And in the middle of it all, XRP entered a special phase. Price was no longer driven only by crowd psychology the way it was before, but also pulled by legal headlines, exchange decisions, and shifts in the attitude of the entire financial system. This is a phase where staring at the chart is not enough. Because there are days when price barely moves, but your mind does not rest. There are days when price jumps hard because of one headline. And there are also days when XRP gets pushed down because fear spreads faster than truth. If the earlier phase was a test of taking hits, this phase is a test of your nerves. Crypto Explained keeps coming back to this idea because XRP is not just a market story here. XRP is a pressure story. As 2021 began, the crypto market in general rebounded strongly, and XRP did not stay out of it. The strange thing is that while many people were still afraid, price started rising again as if the market was trying to prove one thing. Every shock eventually gets swallowed by time. But a rebound does not mean safety. Sometimes a rebound is just a new trap because it pulls people back into the same old habits. See green and believe, see red and panic. In this phase, you can see two groups clearly. The first group survived the 2020 drop, so they became more cautious, and they learned to split decisions. The second group arrived later, looked at the chart, and believed this was a buy cheap opportunity, the kind of story they heard about early Bitcoin. And the danger of the second group is that they step in without realizing they are stepping into a long tug-of-war, where you can be right about the big picture but still lose because you cannot handle the path. Crypto Explained repeats this because XRP punishes impatience more than most people expect. Our first character in this phase is Alicia Perez in Nevada. Alicia is 29 years old and works as a shift manager at a hotel in Las Vegas. She is not a finance person, but after 2020, she started paying attention because she saw friends talking about crypto more than ever. Alicia does not like the feeling of chasing peaks, so she chose a very real-life approach. She waited while people were still doubtful, then entered with a moderate amount. On January 15, 2021, Alicia bought 18,000 XRP at about $0.28 per XRP for a total of about $5,040. She set a rule that sounds simple but is hard to execute. If XRP surged, she would sell a portion to get her money back. If XRP dropped hard, she would not panic sell. But she also could not be stubborn to the point of having no exit. She did not claim she would win. She only said she wanted to survive long enough to see the outcome. Crypto Explained focuses on this because survival is the first profit. Then the market did what it loves to do. It made her feel smart very quickly. In the first quarter and early second quarter of 2021, XRP had powerful rallies that made people think everything was normal again. By April 14, 2021, XRP at times reached around the $1.80 to $1.90 zone. Alicia watched her position grow from about $5,040 into more than $32,000. This is the moment where many people promise they will take profit, then do not. Because greed always whispers one sweet sentence: if it climbed this far, it can climb more. But Alicia remembered the lesson from those who came before her. Profit on a screen cannot protect you from a reversal. On April 16, 2021, she sold 10,000 XRP at about $1.70, receiving about $17,000. She recovered her original money, locked in profit, and kept 8,000 XRP to let the market have a chance to continue. CryptoExplained highlights this because partial selling is not weakness, it is discipline. But the market loves teaching lessons right after you think you learned. After the overheated rally, crypto entered heavy shakeouts. XRP did too. There are days when you watch price drop so fast you cannot react, and you understand why people say the only safe profit is the profit you already took. By May 23, 2021, XRP at times fell back toward around $0.80. For Alicia, the 8,000 XRP she was holding went from feeling like I am holding gold to feeling like I am holding something that can steal my sleep. But because she had already sold part earlier, she did not panic like David in the earlier story. She did not need to dump everything out of fear to save the whole position, because she already saved part of it. This is a massive difference. When you still have a way out, you stay calmer. And when you stay calmer, XRP controls you less. CryptoExplained says it plainly. Exits are emotional protection. Our second character is Marcus Reed in Ohio. Marcus is 34 years old and works in logistics. He saw XRP rally hard in 2021 and started believing this was the chance of a lifetime. Marcus did not enter as early as Alicia. He entered later and with a more dangerous emotion, the pressure to make up for hard years. On September 6, 2021, Marcus bought 9,000 XRP at about $1.10 for a total of about $9,900. He had no plan to split decisions. He had no exit rule. He had only a vague belief that XRP would return to the top. But then the market delivered a kind of decline that is not dramatic, just relentless. By January 22, 2022, XRP at times fell toward around $0.60. Marcus watched his $9,900 shrink to about $5,400 and fell into a familiar mental trap. The more he was down, the less he could sell, and the less he could sell, the more trapped he became. CryptoExplained repeats this because XRP turns small mistakes into long prisons. The year 2022 was the year many people called the year of losing patience. Not only XRP, but the broader crypto market entered a cold season where the future stories got replaced by one question: will it survive? For Marcus, the most painful part was not a one-day crash, but months passing with no miracle. By June 18, 2022, XRP at times fell into the $0.30 to $0.35 range. Marcus watched his position worth only about $2,700 to $3,150. He started blaming himself, started avoiding conversations, started hating even the word crypto. And then he did what many people do in a cold season. He sold, not because of analysis, but because he wanted the trapped feeling to end. On November 15, 2022, Marcus sold all 9,000 XRP at about $0.38, receiving about $3,420. He accepted a major loss to buy silence in his head. CryptoExplained points to this moment because capitulation is often about relief, not logic. Then, as 2023 arrived, the market began showing recovery waves, and XRP kept doing what it often does. It pops fast on news, then cools off when the news passes. What makes this phase exhausting is that you always feel like you might miss the decisive day. Our third character is Kevin O'Connor in Illinois. Kevin is 30 years old, a software engineer, and he watched friends lose money in 2022, so he did not want to enter with emotion. Kevin chose a different approach. He would buy only when headlines created strong volatility, and he would always set a clear target. On July 13, 2023, during a period when XRP was moving violently, Kevin bought 15,000 XRP at about $0.72 for a total of about $10,800. He did not call it a bottom or a top. He just called it a point where, if the market reacted positively, he would take profit quickly. CryptoExplained highlights this because targets create control. And just as Kevin expected, after the sharp pop, XRP pushed higher and then kept swinging. Kevin understood that in days like this, greed is what can turn a good decision into a disaster. On July 18, 2023, Kevin sold 10,000 XRP at about $0.82, receiving about $8,200. He did not make life-changing money, but he turned volatility into real cash. He kept 5,000 XRP as a long-term ticket because he believed that if the long story proves true, a small remaining position can still pay. And if the long story fails, the damage stays inside a bearable range. Kevin did not win in a flashy way. Kevin won in a boring way. And over time, markets often reward boring. CryptoExplained repeats this because boring is how you survive XRP. By 2024, XRP continued moving in a pattern that can wear out newcomers. It does not move in a straight line. It moves in waves. Waves from the overall market, waves from headlines, and waves from psychology. Sometimes XRP looks quiet. Then suddenly, a few days later, it surges because a new narrative hits. This makes people either become addicted to trading or get tired and walk away. And this is where you have to return to the core truth. You cannot control headlines, you cannot control the crowd, you can only control your position. Alicia in Nevada, after she recovered her money in 2021, still kept the remaining XRP as a long-term piece. She stopped watching it every day. She treated it like a risky option that had been funded by earlier profit. That perspective made her far lighter mentally than Marcus, who entered with pressure and exited with exhaustion. CryptoExplained emphasizes this because mental weight is a hidden cost. The 2021 to 2024 period also exposed the biggest debates around XRP. Is it an asset to trade in waves, or is it infrastructure for payments, or is it both? Some people believe XRP is strong because it carries a narrative connected to the financial system. Others doubt XRP because that same narrative makes it vulnerable to regulations and institutional decisions. These two sides can argue forever without a final answer, because the market does not choose right or wrong by ethics. The market chooses by flow and timing. What you should take from this is not a black and white conclusion. What you should take is clarity about what game you are playing. If you are playing the wave game, you must accept that headlines can flip you overnight. If you are playing the long game, you must accept that there will be years where it looks like nothing is happening, when in reality, your endurance is being tested. CryptoExplained keeps repeating this because XRP is an endurance coin in practice. So when you close this phase, XRP gives you a lesson that is blunt and cold. Not everyone loses because they chose the wrong coin. Many people lose because they cannot endure the journey. Alicia in Nevada entered early, sold in parts, turned profit into real money, then kept a small piece to continue. Marcus in Ohio entered late, entered with pressure, had no exit plan, and walked away exhausted right when the market had lasted long enough to grind his spirit down. Kevin in Illinois chose not to romanticize it, bought during high volatility, and took partial profit with clear targets, not needing a huge win, but needing steady wins. And if you followed to this point, you can see XRP is not just a price line. XRP is a story about how humans react to hope, fear, and uncertainty. If you want me to keep telling the history and rises and falls of the next cryptocurrencies in this series with the same storytelling style and real buy and sell examples, subscribe to Cryptocurrency Academy, hit like, and turn on notifications so you do not miss the next episodes. Crypto Explained will keep going, and XRP is only one chapter.